Hey, what's up, Trade Pros? It's Victoria from Trade Pro Academy. Welcome to our YouTube channel. And in today's video, what we're going to be talking about is the volume profile, the complete ultimate guide to understanding how the volume profile works and how you could use it as a trading strategy in itself. So you have to look no further because this volume profile video is going to explain the nuances, every single bit, every moving part to the volume profile so you can extract a lot of information. Now, how many times have you gone on the internet or on YouTube and looked for a volume profile video that left you second guessing, left you wondering, left you a bit confused, not really knowing how to break it down, what to look for, and exactly how to use it? Well, this is the point of this video. I want to make this so simple and so easy to understand that you guys can take this and apply it today, right? Just after you watch this video. So that's exactly what we're going to be doing today here on the Trade Pro Academy YouTube channel. So I hope you guys enjoy. Take out a pen and a paper, enjoy your favorite beverage, right, while you watch this, and let's get started. So first, I want you guys to hit that like button, hit that subscribe button if you're already not subscribed, and get ready for this little intro. This alone can turn your trading around, just understanding how the volume profile works. So pay close attention to this. In today's video, we're going to be going over 5 main components of the volume profile and understanding each step separately. Number 1, what is the volume profile? Number 2, what are the components of the volume profile? Number 3, what is the volume profile used for? Number 4, what are the nuances of distribution theory and auction theory? And then number 5, we're going to be going through some volume profile examples, breaking everything down for you guys. So let's start with part 1. What is the volume profile, right? This is the most basic aspect of this video. Now, the volume profile is generally seen on either side of your chart. It is going to be a vertical representation of volume at each price level. Now, the main thing is the volume profile teaches us 2 main things. It divides the areas of attraction and the areas of rejection in terms of volume, right? Where price is anticipated to reject, where price is anticipated to attract to. So understanding these 2 concepts really gives you an edge in how to interpret the volume profile. As we discussed, the volume profile is going to be either on the right-hand side or the left-hand side of your charts, and it's going to display the volume traded at each level, meaning that there's going to be levels of higher volume, there's going to be levels of lower volume, and there's going to be levels of no volume naturally. Now, to understand this a little more, the areas where you see extended volume profiles are areas of high volume. That means that price has traded a lot at that area. The asset that you're looking at has traded a lot at that area. Typically, the asset usually stays around that area, and that is what creates that thicker volume. Now, if price moves quickly through an area or doesn't trade much through that area, you're going to get those thin volume profile ledges. So with this basic understanding, that means that price is going to be attracted to large volume areas and it's going to reject small volume areas, right? If the big volume areas constitute of a lot of trades and price actually staying at that level, that just means that they become areas of attraction while lower volume areas become areas of rejection. Now, part 2 of this, now that we understand the base of the volume profile, we have to understand each component of the volume profile. Now, here it gets a little more complex because the volume profile, depending on how you look at it, has 7 overall moving parts. These 7 parts are pivotal to understand how to actually use this volume profile. Now, the first component that we're going to be talking about is going to be the point of control, or the POC. Commonly known as the POC, it's going to be denoted in a different colored line on your volume profile. Now, the point of control is the area at which the most volume in a certain session, right, depending on what kind of session you're looking at, has been traded. This point of control is going to be, again, the largest area traded, and it's going to be surrounded by usually thick volume. Now, the point of control is an area at which price tends to gravitate towards, again, because it's a massive area of volume. Now, when price gravitates towards that point of control, you can typically expect sideways chop movement in and around that area, meaning that typically I don't like to trade around the point of control, especially entering into trades. You can exit around the point of control, but as you enter around the point of control, you may have noticed that it gets very, very dicey and you get a lot of sideways movement. Now, the second component is going to be the value area. Now, if you guys have taken stats at any point in your life or have even seen a bell curve, you're going to know what the value area is. Because if you take a bell curve, for example, the bell curve is a distribution, right? Based on the first standard deviation. Now, the first standard deviation is typically around 68%. That means 68% of the data is going to be within this first standard deviation. Now, you typically see the bell curve in a horizontal fashion, but if we throw it up on a volume profile, we just flip it to its side and we have the value area. Now, the value area is denoted by 70% of the total volume traded within a session or whatever time period you're looking at. Now, 68, 70%, we just rounded it up quickly because we're traders. And at that point, the value area, the 70% that is traded, becomes a area of what we call balance in the market. As long as we sustain movement and price in this area, we're going to see what we call balance. Now, the value area is sandwiched by two different levels. Those levels are going to be the value area high and the value area low. Now, the value area high is at the top of the value area, which kind of sandwiches the price, right? Everything above the value area is going to be the remainder 30 odd percent of the volume. And then the value area low is going to be the bottom ledge of the value area. So value area high and value area low are found at the lows and highs of the volume profile. And these areas typically try to hold the balance within the value area, and should we escape, price becomes imbalanced. Number 5, we have the high volume nodes. Now, the high volume nodes, as the name might suggest, right, it's an area where you have a lot of volume, right? Those are typically denoted by the large volume profile blocks, if you will, that stick out aggressively, right? They could be bellies, depends on how you look at them. Now, these singular high volume nodes are going to be where a lot of price has actually traded. Now, these become areas of interest for price to gravitate towards, especially if they're surrounded by a lot of low volume nodes. Now, here's number 6. Number 6, the sixth component is going to be the low volume node. Now, just like the high volume node, we just reverse it, we inverse it, do what you like with it, but it is going to be the area where we see a very low volume traded, and on the chart is going to be depicted by a very small volume profile level. So not too much price has traded through these levels based on prior movement, and they become areas of rejection. So price typically passes through these areas very quickly. Now, if we combine the high volume node and the low volume node, where we have a drop off from high volume to low volume, or low volume to high volume, depending on how you look at it, these areas in combination are called ledges. This is what I call a ledge, or a shelf, right? A volume profile shelf is what a lot of people do call it. Now, these shelves become interesting areas for support and resistance in the combination of both the high volume node and low volume node. Now, the final portion of this, right? The 7th, if you want to consider this a component of the volume profile, is going to be the belly. Now, the belly, right, if you flip it on its side, you'll see it's like an excerpt of the volume profile. It can and it cannot be in the value area, right? It can be outside, it could be within. Now, these bellies are usually denoted by a lot or a cluster of high volume nodes, maybe different levels, different frequency of high volume nodes, but fairly exaggerated volume nodes. Now, these bellies are trapped by low volume nodes, right? A belly is created with a low volume node on either end, and those areas at the belly ends where you have the low volume node meeting the high volume node is what we call the ledge. So these are important areas of attraction. Remember, going back to it, price gravitates towards the high volume node areas. Now, if a belly is a cluster, a massive cluster of a lot of volume, price is naturally going to try to accept it. Now let's dive into part 3 here. We've understood the components. We know what the volume profile is, but what is the volume profile used for? Now, this is going to be one of the most important aspects of this video. What is the volume profile used for? How do we use it? Now, with this simple strategy and understanding the use of the volume profile, you can develop a strategy for any market and turn this into a profitable execution, right? This alone can turn your trading around, just understanding how the volume profile works. So pay close attention to this. So the most obvious thing about the volume profile is, okay, it could be used for trading, but how, right? Number 1, we can draw support resistance areas based on volume very, very accurately. And doing that, we have to understand how the ledges work. So remember, we talked about ledges. The ledges are going to be where high volume meets low volume, and you create somewhat of a shelf, right? That shelf becomes a support resistance area. So ideally, price starts rejecting through that area. Should price accept through the area, then you're going to see an extended move, right? Typically, these are found at the edges of bellies or the areas that you have a lot of volume, which encompass balance. Once a ledge is broken, right, you are going to see price imbalanced and price is going to try to balance again. So we're getting ahead of ourselves. We're going to talk about that very soon. Now, the other way to use the volume profiles is looking for areas of attraction. So we talked about ledges. We've talked about the attraction a lot. Now, the attraction becomes where can I find high volume areas, bellies, high volume nodes, POCs, where price can gravitate towards once price becomes in balance. So knowing those two simple aspects, you can start already devising a plan to actually trade with the volume profile. The volume profile can also help us understand what the general sentiment of the market is, right? Using these bellies, using these ledges, we can understand that if we escape a belly, right, whether it's to the upside or downside, realistically, that sentiment is going to continue upside or downside to look for the next area of balance. So, for example, if we have a belly, we've got a belly that's sitting around this area and we try to escape to the upside through the ledge, right? Sentiment becomes very actively bullish through these areas because price is going to try to explore another move, especially if that ledge has held time and time and time again resistance. What we're building through that area is going to be buy stops. Those buy stops get hit and then we look for balance elsewhere. Now, the final use of the volume profile is going to be risk management. We can use our ledges to identify where our stop losses are, maybe where our entries are, and even where our targets are. So it's going to be a very important aspect to your risk management. A lot of people use this religiously. Now, the fourth part of this video, distribution theory / auction theory. This is going to be a very, very important aspect because this is where we really understand how the volume profile works, what we could expect, and just a general set of rules that we could live by trading the volume profile. So why don't we break those down? So first, distribution theory, a quick little breakdown is how the volume profiles are actually used and how they work, right? How we expect the volume profile to work just based on how price reacts in certain levels. But first, we do have to understand auction theory. Now, we've talked about balances and imbalances quickly, but here we're going to throw up this little image to kind of break everything down. So first, we start off with an efficient market, right? A market's efficient, you have balance. When you have balance, you have an efficient market where price just tends to move within that balance. Now, this can get disrupted. How can this get disrupted? This gets disrupted by either supply being greater than demand or demand being greater than supply. So if you have more aggressive buying, right, we take over and we look for the upside. This is when we exit a balanced area. That balanced area, right, now that we've exited it, price is in a quote unquote inefficient market where we're in quote unquote imbalance. Now, to regulate this, right, we're going to look again for balance. So price either gravitates back to where it came from in the balance or looks for balance elsewhere. And that then creates a new efficient market. And this just rotates and rotates and rotates time and time again. So understanding that, we can understand some few key concepts to how the volume profiles work. Take this diagram, for example. If we have balance where the green boxes are, right, and we exit the balance to the downside, what we're going to be doing is looking for prior balance that has maybe traded or the creation of new balance. And then we create another balance level, markets become efficient, and then maybe we exit again. And what are we going to do? Perhaps we look for the prior balance where we initially started. Remember that we talked about bell curves, we talked about value areas, and we also talked about balance. So understanding the core concepts that we learned before, the balance is the value area, right? If we maintain within the value area, price is considered to be efficient and balanced. Now, when we exit, we have other things to consider. Now, here are 8 rules that I call distribution theory rules, right? These 8 rules help us understand exactly how the movement should move and how it should happen in the volume profile and in the general market. Rule number 1, if price is within balance, we expect that price maintains balance and goes and tests either end of the balance, the value area high or the value area low. Rule number 2, very similar to rule number 1, as long as we remain balanced, we are going to look to test the edges of that balance, and those edges of balance are expected to reject to hold us within balance. Rule number 3, price is choppier, quote unquote, in balanced areas, right? Choppiness means that we're just going to rotate because there's so much volume created in that area. There's no general trend. There's no imbalance. There's no edge technically until we see those edges. Now, when we remain choppier, the choppiest portion of this is going to be the point of control of the POC, where we do not necessarily want to trade. Rule number 4, if price escapes the balance area, what we call this is imbalanced. And then rule number 5, when we escape that balance area, typically what we're going to be looking for, the next target is going to be a prior balance, and usually the point of control of that prior balance, because that's where the majority of the volume has been traded. Rule number 6, if we get an aggressive reaction from the POC, we expect to disrupt rule number 1, where we probably will not see the other edge of the balanced area. Rule number 7, we usually use the edges of balance, right? The value areas, highs and lows, as key support and resistance structure, whether we're within or without. And then the final rule, rule number 7, if we spend a lot of time, right, a lot of time and volume rejecting either the value area high or the value area low without testing the opposite, we are most likely going to continue the move through and create imbalance. For example, if we continuously test, right, the value area low at the lows, continuous bounce, 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 and we don't come up into the value area high, the value area low is most likely going to be broken. So now that we know these distribution laws, now that we know these rules and how we expect price to react in and around balance, we should go through some examples of the volume profile and really break this down. So with each law, we can see it up here on the screen, and we're going to show an example as well. So law number 1, rule number 1, call it what you will. When we are within balance, right, we are most likely going to test from the bottom to the top of that balance, the value area high or the value area low. Rule number 2, as long as we remain within balance, we're expecting those edges to reject and to hold within that balance. Rule number 4, once we break out of the balance area, right, we are expected to be imbalanced, and we could hold that ledge of balance, the prior ledge of balance, as a support or resistance. Rule number 3 and 6 combined, remember, once we escape balance, we are going to look for the next balanced area, right? Once we go imbalance, we're going to look for the next balance, which could be a prior balance area. And that target is most likely going to be the point of control. And then rule number 7, if we get outside the balanced area, we look for a new balance area, and we reject the point of control aggressively, we are most likely going to disrupt rule number 1 that states we're probably going to hit that next value area. So when we get that rejection of the point of control, we might go imbalanced again, and then again, the cycle continues. So I want to show you guys how the value areas, how the volume profile works on the S&P 500 in a little more detail and explanation. So we have this volume profile here. We're going to use this volume profile that we've gathered. Now you see this opaque volume profile area here. That's going to be the value area. The value area high is here, value area low at the lower end, and then everything outside is outside of the value area, the remainder 30% of volume. Now, if we take this and we consider this, you can see where the value area high is, right? The value area high, what do? When we come in to the value area high, what we do when the market opens is we look to reject that area. We look to reject that area. Obviously, sometimes you get a little slip up, but we reject that area right here. This is the open of the session. So I only use this based on the information that I have from the Globex session for the futures, for example. But we come in, we reject the value area high, and what are we going to do? We are going to come in, law number 1, into the value area low and ideally reject it, right? So these are a few of the laws already, or rules already shaping up. We exit the value area, and what happens? We become imbalanced. When we become imbalanced, what do we look for? We look for what? Number 1, the prior day's point of control, which is right here, and then the prior day's balance high, the value area high, which we come into and then reject. What then happens is we move back into the value and attempt to hold these areas as price rotates within there. So we've seen a lot of these rules already on the S&P 500 futures here, and it's the same thing on the current day. So we open up, and what happens on the open? We sustain the value area lows and look for the value area highs. We are currently outside of the balance, creating an imbalance area. And what we're going to do theoretically is going to look for balance elsewhere. Balance elsewhere, we might have to zoom out a little, but balance elsewhere is all the way up here in the 4,320s. So we'll see how that shapes up if we get a lot of volume through these areas before we anticipate a potential move back into balance. So that's a live example of what we got going on. And let's jump into this outro. So with these rules and understanding of the volume profile, you can take this and trade futures markets as we've displayed on the S&P 500 time and time again here, or you can go over and trade any other asset, whether it's options, whether it's stocks, any individual name. So we've talked about what is the volume profile, the components of the volume profile, how we use the volume profile, the distribution theory and auction theory behind the volume profile, and we broke down some examples. You saw a lot of examples on the S&P 500 mainly and how price reacts in and around those areas. So understanding this, you can develop a strategy in itself just trading the volume profile. Now, we do have a strategy that trades on the S&P 500 futures, right, with the volume profile that we do want to share with you guys if you show some interest down below. Drop a comment, hit that like button, and hit that subscribe button if you're new to this channel and you want to learn more content like this. The volume profile is an amazing tool that I use on a daily basis, and a lot of our traders have become widely successful just by following these simple rules and steps of the volume profile. So keep that in mind. I hope you guys enjoyed this video, and I hope I squashed all volume profile questions that you may have. And go ahead and try this strategy. Go ahead and break this down and apply this to your trading. So if you want to learn more about volume profile trading strategies in the specifics when it comes to futures and options, I just want to comment down below and we will do it for you. So thank you guys for listening, and I'll see you guys next time.